prices are falling at the fastest rate in more than a decade.
The average house price is still 8 times the average salary.
It's a bigger fall than expected and the sharpest annual drop since 2009.
Welcome back, friends, to another property update video, and today we're going to be running through house prices, rents, buy-to-lets, arrears, mortgage rates, and so much more. It's been a while since I've done this, as it's been a crazy month, and I've got some exciting videos to share with you guys over the next few weeks. So let's begin with the first article. UK house prices suffer the sharpest fall in 14 years. Now, Halifax says prices fell by 4.6% as high interest rates dent home buyer demand. Now, this data that was released by Britain's biggest mortgage lender showed this fall happening in August, and it actually made it the biggest year-on-year decrease. And in terms of its price tag, what this typically means for a UK home is dropped by around £14,000 over the past 12 months to £279,569. Now, if we consider obviously how much the interest rates have gone up by within that period, it still doesn't feel like we're any better off, as buying a house seems more expensive now and more difficult than it certainly has over the last decade. And especially when we look back to the pandemic as well, average prices are £40,000 higher than before the pandemic itself. And it just makes you think that whole race for space and the craziness of the furloughs and the low interest rates, it really did inflate the housing market. Now, as many of you probably know, the Bank of England has raised interest rates 14 times since December 2021 to 5.25%, which actually pushes the average rate on 2-year mortgage rate fixes to 6.67%. And this is according to the latest figures from Moneyfacts. And I'm just going to quickly share a quote with you guys from Kim Kinnaird, who's a director of Halifax Mortgages, who said market activity levels slowed down during August, and while there is always a seasonal effect at this time of year, it also isn't surprising given the pace of mortgage rate increases over June and July. And he then goes on to say that while we did ease last month, rates still remain much higher compared to recent years, and this may well have prompted prospective buyers to defer transactions in the hope of some stability and of course greater clarity on future directions of rates in the coming months. Now, one thing that is positive is that income growth has remained strong over recent months, which has seen the house price to income ratio for the first time fall from a peak of 5.8 in June last year to 5.1 now, making it the most affordable level since June 2020, and will somewhat offset the impact of higher mortgage costs. And remember, friends, I think I mentioned this in my last video, or one of the videos on this channel, is that the rates we're seeing now are actually a lot more normal, should we say, as opposed to the ones we were seeing around the time of the pandemic, which were extremely low. Because if you look historically, they were actually the anomalies, and a lot of people got used to low interest rates and are going to be in for some shocks if they haven't already when it comes to refinancing and they're seeing their mortgages absolutely balloon. Moving on. The next article, again with a bit of a dramatic headline: UK property prices fall the most in 14 years. But rather than repeat what I've just gone through, there were some other findings within this particular article that I do want to share with you guys. Now, a rival lender, Nationwide Building Society, who did their own survey last week, showed prices falling 5.3% from a peak a year ago. And together, the reports indicate the market is now roughly halfway through the 10% slump in prices that many economists have forecasted. And they go on to say that we do expect further downward pressure on property prices through to the end of this year and into the next, in line with the previous forecasts. So what does this information tell us? Now, I remember when I first reported that house prices had finally fallen after consistently rising, and many people, I remember, laughed in the comments stating that it's only 0 point something percent, which I remember it being at that particular time. But we've now seen them fall for a 5th consecutive month, and we have to start considering that there is a possibility that this will continue on, and we're not going to get any sort of change in direction, at least until mortgage rates stabilize, because still there's a lot of uncertainty in relation to that. And I just want to point out a point from Ronald Mitchell, who's a Norwich-based independent mortgage broker. He stated that the effects of the increase in borrowing costs are now very apparent, with property sales harder to achieve and sellers being tempted by lower offers so they can simply move on. And he expects the rest of the year to follow this pattern until consumer confidence in mortgage pricing returns, something that I just mentioned a few moments ago. And further reports show that all UK nations and the 9 English regions registered an annual decline in house prices in August, with northern locations generally proven to be more resilient than areas in the south. And this was according to Halifax. And if we look at the southeast, that was actually the worst performing region, with property prices falling by an annual rate of 5%, which makes it the largest average annual drop in price in cash terms, which in London was £22,800. And even if we look at areas like Wales, which actually recorded the biggest gains in property prices during the pandemic and the whole race for space, they've also seen property prices fall by 4.7% just in the past year alone. In contrast, however, Scotland property prices fell by 0.6% over the past year, which is actually the slowest pace of decline in the UK. Now, with that all said and done, let's talk about renting, which for many people is a huge problem. Either you find yourselves facing higher rents due to landlords needing to offset some of their costs onto yourselves, or just finding a nice home. You tend to find yourself competing with hundreds and hundreds of applicants. Even myself, I've recently moved from my last place. I felt the anxiety of having to move and compete with so many different people. So I can fully sympathize and empathize with anyone in that position. Now, one thing we know is rents in London are at their highest level on record, and they're far above the rest of the UK, and they're actually higher than many European capitals. London rents rose by a fifth between March 2020 and May 2023, with the median cost of a studio in Greater London reaching £1,275. And that's according to property agent Savills. Now, just that figure alone is remarkable. I've got a few properties that I rent out, 3-bedroom houses, 2-bedroom houses with man caves and loft conversions, and they're not even close to those figures. So it really does show what you kind of get in terms of at least space in London and the prices you have to pay for it. However, one thing that we must look at is obviously the demand has increased for tenancies, and this has obviously been fueled by record immigration to the UK and a wave of students pushed into private rentals. Now, experts have noticed this. You don't really see it too much on the news, but it's something that I'm sure many of you have your own opinions about. Now, Richard Donnell, who's head of research at Zoopla, he stated that the affordability of home ownership in London, where you need to be on £100,000 income and have a £140,000 deposit to buy, means a lot of people are having to rent. Now, just those figures alone are absolutely crazy. Imagine how long it would take many of us to save £140,000, let alone have an income of £100,000. I'm sure there's a few of you watching this that perhaps have that. But if we think about the general population, and I can't remember the figures off the top of my head, but I will throw something up on the screen. If you look at the average of what people actually have in terms of savings, or what the average deposit is across the UK, I know it's far, far, far away from that £140,000. And if you look at the average income in the UK, it's definitely not close to this £100,000. So this is definitely a huge problem within the housing market. Now, Neil Short, head of London lettings at an estate agent called JLL, said they were entering bidding wars and offering to pay multiple months worth of rent up front. Now, friends, just for full transparency, that was something that I obviously offered when I moved to my next property. It was something I was comfortable doing, and I knew it would put me ahead of other people. Obviously, being a landlord myself as well, I feel that that probably helped in terms of getting my application accepted, because I treat their houses as if it's my own. And I'm sure a landlord speaking to a landlord, there is some level of understanding there in terms of not having a rogue tenant, for example, coming to the property. And I've got stories on that, which I'm going to be sharing with you guys very soon. So Neil Short goes on to say, I've been doing lettings for the best part of 20 years. And only recently have I seen an instance where we've had to take a property off the market because within half an hour, we generated viewings of 20 people. And essentially we were inundated with inquiries and we had to physically stop them. Crazy. Now, I've actually seen worse than that as well. I mean, even myself, even 2 to 3 months before leaving and knowing I was going to leave my last place, I was on Rightmove, I was on Zoopla, and I did have all the alerts set as well. So guys, if you are looking to move, you do need to be on the ball 24/7. Now, adding to the pressure, the stock of available homes to rent in London is already insufficient to meet the demands, and it's at risk of shrinking after just starting to recover from a 5-year low in 2022. Private landlords provide accommodation for 4.8 million households, which is approximately a fifth of all UK households according to Savills. And of those, more than 1 million are in Greater London, where they accommodate about 30% of households. Now, Britain's private rented sector did boom in the 2000s after the rollout of the buy-to-let mortgages, and London's high resilience on interest-only loans has actually made it vulnerable to rising borrowing costs, which are putting landlords' business models under strain. I've got a video coming out just in relation to a very small mortgage on a property I have, and even the cost of that increasing so much has impacted the cash flow and made me have to think twice. So I can only imagine what it's like for those within this area. If they haven't built up enough equity, or they don't have enough to kind of weather the storm, shall I say, for the next 5-10 years perhaps, depending on how long we go through this mess, it's going to be very, very difficult times for many of them. Now, the average buy-to-let residential mortgage rate in the UK rose from 4.5% in August 2022 to 6.6% at the end of August 2023. And this was according to Money Facts. And this, we know in itself, hurt landlords within London, but also outside as well. And of course, that has a knock-on effect as well, because it affects the tenant. If the tenant is then forced to pay more rent, then obviously that becomes a stressor on them. And in some circumstances, the tenant may not actually be able to pay more rent, which then causes the landlord needing to either put their hand in their own pocket, which for many people, which may surprise some of you listening today, many landlords are normal people with jobs as well. And if they don't have that surplus of savings themselves because they put it all into the property or in other ventures, then it's going to be very difficult for them, and they may even be forced to sell up. So again, a knock-on effect. The housing market isn't great. It needs to be fixed. I don't have the answers for that. Maybe you guys do. So please let me know in the comments. Now, David Fell, who's an estate agent at Hamptons, he obviously talks about the 2016 tax changes is starting to be felt today. And that's usually what happens. Something's implemented and it takes a while for it really to start kicking in. And again, this is why I've always spoke about the recession as well. I feel like because unemployment hasn't become a big thing at the minute and employment stayed relatively high, we're not seeing the true effects of recession. But if you look at some of the major companies across the world, I'm talking big companies, they're starting to lay off a lot of staff, which means the market pool in terms of people with skilled jobs coming from big companies is high, making it more competitive for the average person like you and I. So I still think, and I'll stick by this, there's a lot more pain ahead, not just in the housing market, but just generally across the economy. But again, I'm happy to be wrong, my friends. Now, segueing back to buy-to-lets, lenders repossessed 440 buy-to-let properties in the UK in the second quarter of 2023, which is up 7% from the previous quarter, while a further 1,870 landlords were behind on repayments by a total sum of more than 10% of their outstanding loan. And this was according to UK Finance. And France goes on to say, I cannot believe anybody would go into buy-to-let now. I would question their sanity. Do you know what, friends? I've said the same thing, but I just don't think now is the time, my friends. And then moving on from this, Donald then states that unfortunately we're going to see a lot of old landlords selling up. And I wouldn't be surprised if you see new ones selling up too as well. I remember an influx of many people doing the buy, refurbish, refinance model, and they're buying 10, 15 properties within the space of, let's say, 5, 6, 7 years, gloating on social media, talking about how well they're doing. And well, their refinances are going to come up now. So that cash flow is going to massively drop. So again, just be mindful of that. If somebody's selling you the dream, but they've slowed down in their own purchases and acquisitions, it's just something to be mindful of, my friends. Now, about a quarter of UK tenants in the private rental sector receive government housing benefit, which has come from Zoopla and the homelessness charity crisis. And the figure in London is actually 29%. And essentially what Donald's gone on to finally say is that we haven't built enough social housing over the past 20 years, so the private sector growth has absorbed unmet demand. As soon as the rental market stops growing, it highlights a whole lot of problems. Something I've said many times. It's so easy to blame the landlords. They seem to be the target, not just for disgruntled tenants or people trying to get on the property ladder, but also for the media too. But it's a lot more complex than that, my friends. Now, one thing we do know is that obviously evictions are on the rise. I've had to do my first eviction recently as well. Again, I'll explain that in another video. Very, very stressful times. I can understand the government needing to protect tenants in places, but if you're not protecting the landlord at the same time, who then needs to pay for the mortgage, the insurance, or anything that goes wrong with that property, even if a tenant's not paying because they still have a legal obligation to do so, it's going to cause them massive problems, and it's going to cause them to perhaps go into arrears or getting repossessed or having to sell that property. So I think something more needs to be done there. But again, if you have better thoughts or you totally disagree with what I'm saying, please throw it in the comments. So rents are also rising faster on the outskirts of London too. And here are some areas where you can obviously see the rent increases. But what I will do is I will just put these links in the description as well, my friends, if you want to go back and obviously have a look at them. Let's move on. There's been new data coming from HomeLet, which has revealed that the average UK rental prices have continued to rise. And excluding London, we now sit at £1,051 per month, which is up 1.4%, while in the capital, the new highs of £2,145 per calendar month, which is an increase of 1.7%. Crazy. And again, landlords will probably continue to increase them because we know that the current average 5-year rate is now 6.19% compared to 2.64% in December 2021. So this not only makes it difficult for first-time buyers to obviously go out and buy a house, but it's also going to make it very difficult for landlords as well to make their property stack or at least cash flow positively or even just break even. And as a result of this, we've obviously seen the rental market see a lot of landlords actually exit. And it's surprising because I remember 3-4 years ago when I first started doing videos, I think it was on TikTok, and one of the most popular comments, actually, I'm talking hundreds of people used to say this, is, well, if landlords left, then it'd give us an opportunity. But here you can see instantly that it necessarily doesn't just give you an opportunity. Just because a landlord sells a property, it doesn't mean that you can just simply go buy that, because you've obviously got a lot of acquisition costs and you've got a lot to factor in. And it is difficult, friends, to try and buy a property in this particular market. And this article actually confirms some of the stuff I just said there, that it's actually become less profitable to be a buy-to-let landlord and rent a property out because of obviously soaring mortgage prices, which is forcing many landlords to cover the costs of their mortgage repayments, alongside the planned potential introduction of the EPC targets, which of course will force landlords to upgrade their energy efficiency of buy-to-let properties to a rating of C within 5 years, with of course the fear of being fined up to £30,000 if of course they don't adhere to it. So I can definitely see many landlords, even bad landlords, you know, there are bad landlords out there. I'm not here just saying that landlords are great. There's good and bad on both sides, that have their properties in such a bad state. I can just see them selling up, or they're going to get hit with really heavy fines. Now, data from Cornerstone Tax 2020 found that only 20% of landlords in the UK now say their investment has been a successful one. Very, very interesting. If you go online, every single guru is telling you it's great. So let's talk about the property crash, because obviously that's one of the most clickbait titles. It's one to obviously get many of you to click, but it is something that I have been adamant on. And of course, my timing is completely off. New figures from Halifax show that house prices have had their biggest year-on-year fall since 2009. Does this mean we're going to crash? We've spoken about it. Possibly not, you may say. Although some of you may think that the writing's on the wall, and I'm still leaning on that side. If I change my stance, of course I will hold my hands up and I will say otherwise, but house prices are still expected to fall further, despite mortgage rates somewhat stabling, although we haven't really seen them stabilize and many of us would like. Now, experts say that house price drops will continue at least this year and into the next year, and some say they can drop from 15% from their peak. I personally think, again, it depends on the area, we're going to see much larger drops across certain areas within the UK. Now, Tom Bill, who's head of residential research at Knight Frank, stated, "We think house prices will be down 5% this year and 5% next year, so roughly 10% over the next 2 years." And he reckons it'll be spread over 2 years as there's more people on fixed rate mortgages coming off them more gradually, so there isn't a sudden lurch downwards. And he believes the pain will be spread out. And again, I fully agree with that. Mortgages, properties, they're not liquid. It's not things that change overnight. It's not like the crypto market, for example. So things do take that little bit longer. But I can see the writing on the wall. And yes, my timing is off, but I do feel maybe this time next year I will be saying I told you so. Or of course, you will be telling me in the comments you were completely wrong. The market was going to continue to go up. Now, we do know the next base rate decision is on the 21st of September, and it's hoped that the Bank of England finally stops making an increase. I wouldn't hold your breath, my friends. I think 2 or 3 rate rises ago, I predicted that up until September, including the August one, we will still get rises happening. And if I had to bet right now, I think we're going to potentially get one more rate rise. Of course, we'd like it to stabilize or stop, but of course, inflation is the number one thing that they're trying to tackle right now. Now, Mr. Bill added that although rates are coming down, it is not enough to motivate the market. Sentiment will improve once we know the bank is likely to raise rates anymore. Currently, people are in a tunnel and can't see the light, but we are getting closer to the end of rate rises. Now, new lender Perenna, I've never heard of them. Obviously, they're a new lender. They've been approved to offer mortgages with fixed rates of 20 to 30 years by the end of this year, with rates estimated to be between 6.5 and 7.5%, claiming people would benefit from the deal as they look for stability. I'm not sure how I feel about that. It's still very, very high. Now, the rates are higher than the current averages, which again, this article goes on to explain why would anyone opt for such a deal. I certainly wouldn't myself. However, the lender said its unique selling point is that customers can benefit from the flexibility of an early repayment charge period of just 5 years. So that's something that many of you, I hope, are looking into in terms of your ERCs, or looking at how much you can overpay on a particular mortgage as well. It's one thing looking at the cheapest monthly mortgage, but you do have to kind of assess how much am I paying over the whole term. So please make sure when you're sitting with your brokers, you are having those discussions and you're working it towards your own personal finances and circumstances. And on a 30-year deal, fixed Perenna will allow a client to borrow 5 to 6 times their income. In a period where lenders are reducing clients' maximum borrowing to factor in the cost of living, this income multiple calculation will allow more homeowners and first-time buyers to potentially get on the property ladder and offer them a level of stability and flexibility they need. Now, the 5 to 6 is interesting because obviously, you know, you can potentially get more house, but you are definitely going to be paying more interest. And remember, friends, if you're increasing your affordability and you're getting the most house you can possibly get, the chances of ever overpaying are very, very low. So again, I can only see this really being beneficial for the lender. It's not something that I'm singing about, but I just thought I'd share it with you guys because you're probably going to see it pop up in the news soon. Now, buy-to-lets. Just stumbled across this myself, but Zoopla says buy-to-let property by landlords is 25% lower than the wider housing market. Again, landlords are needing to sell in many areas, and it's just not what it used to be. But I do think the market is changing, and I do think it is heading towards institutions taking over. So maybe this was always by design, where you kick out the smaller landlords and then we're essentially all renting from institutions. Who knows? But essentially this article warns that buy-to-let investors in Southern England now need to have equity of 40 to 50% of a property's value to get the numbers to stack up. And as a result, it forecasts that new investments will be lower this year. So rather than your 20%, your 25%, you're going to now need a lot more deposit. And with more landlords selling previously rented homes, there is more supply that appeals to first-time buyers. So based on trends during the first half of the year, Zoopla is now predicting that cash sales will fall just 1% this year, while the number of mortgage sales is projected to be a whopping 28% lower. And then finally, it just goes on to obviously state that cash buyers are more immune and on track to account for more than 1 in 3 sales in 2023. The mortgage rates have started to fall slowly, but rates need to fall below 5% before we see an increased appetite to move home in the second half of 2023. So yeah, those sitting on cash are probably going to be smiling the most, especially if they're getting 25% genuinely below market value or 20% discounts, because that's instant equity. And of course, if they can buy a property without the need for a mortgage, then yes, they've got a lot more money than many of us sitting here watching this video. And if we just look at the landlords in London as well, because many of those who plan to remortgage fixed term loans, they actually face monthly payment increases of up to 80%. That is absolutely crazy when you think about it. So new data from Dashley, which monitors more than 100 billion of mortgages, shows that landlords in London renewing their mortgages this autumn and next spring will be on average £6,384 worse off each year. Now, for most landlords up north, they probably don't even make that much money. So that's a crazy, crazy amount. Now, based on the sample of 1,000 buy-to-let mortgages that expire between the end of September and the end of April next year, Dashley calculates, assuming that the best deal is acquired, the average monthly mortgage payment for a London landlord is likely to rise from £662 to £1,194, which is an increase, my friends, of £532. Now, Imran Khan, co-founder of letting specialist Property Loop, stated that London landlords are nearing crisis point. In my 20 years working in property, I've never seen such a precarious landscape. And one recent example involved a landlord with a 100 property portfolio who had to hand due to untenable mortgage payments. So it's certainly crazy times in the housing market. Now, will we get a crash? Will more landlords continue to sell? Will first time buyers ever get a crack at the market? Who knows?